Good evening, everybody. Hope you had a good session today. It was the FOMC meeting today, and we got our rate decision, 50 basis point cut from the Fed. Most of everybody, it was a torn decision. The market wasn't really too sure what was going to happen today, to be honest with you. The only major bank to really guess, as far as a 50 basis point was JP Morgan. Go figure. Everybody else was kind of on the fence, especially leaning towards 25 basis points. Here we have the FOMC statement, which you can go to the federalreserve.gov website and take a peek for yourself. You can also get the updated dot plots and all that kind of good stuff, and any pertinent information that you may possibly need to, kind of see into this for yourself. But as we look at this statement, we can see that the committee continues to seek inflation rate at about 2% over the longer run. The committee has also gained greater confidence that inflation is moving sustainably toward 2%. And judges that the risk to achieving its employment, inflation, and inflation goals are roughly in balance. So Powell and the FOMC members do believe that they've achieved their goal with inflation, and they decided to cut the target rate by a half percentage point to pretty much make sure that the labor market remains pretty resilient. We've seen the unemployment rate, which currently sits at about 4.2%, which is what we've seen here. Currently, the rate is about a little over 4%. They do see it going to about 4.4% by the end of the year, which is a little bit higher than what they've projected versus 4%. Back in the June meeting, but Powell does say that the labor market is in solid condition and that their intention of the policy move today is to pretty much keep it there. That is going to be their main focus, is the unemployment rate and the jobs data. So that is definitely something that we are going to continue to monitor as we continue to get the data into the November meeting. That's where we are anticipating another 25 to 50 basis point rate cut before the end of the year. And we also want to keep a close eye on the housing data. Powell did suggest that the housing supply is something that they are pretty much concerned with because, housing and rent continues to be elevated, but that is something that the Fed doesn't really have control over. That is something that other parts of the government are going to have to try to resolve to bring rent inflation down. There needs to be more supply and all that other good stuff. So, definitely going to be paying attention to the housing data, the jobs data, and we'll continue to make sure that inflation isn't sticky and that, in fact, we are getting our soft landing that they, so desperately desire. So that's where we sit. I did have I wonder if I closed it by accident. If I did have a view of the historical, let me see if I can pull it up real quick. I did have a look at the historical look of here we go, of the unemployment rate. We can see here that as of right now, the unemployment rate is historically low. 4.2% was the last reading back in August. We can see we've had spikes, before COVID, was jumped up to about 15%. The great financial crisis got up to about 10%. But as you can see, historically, we're still sitting at a very strong labor market. 4.2%, 4.4% is not too shabby. Pretty big win there for the Fed. Now, let's get into some of these charts instead of me blabbering about the Fed. If you want to do more research, feel free to do so. But here we go. Here is a daily chart of the SPY, the Spider ETF. We can see that we did continue. We did make another new lifetime high here on the SPY. 568.69 was the lifetime high. We are still above the key major moving averages, volumes continues to look pretty good here. Starting to, possibly enter a squeeze, but this is not showing it as of yet. But yeah, as you can see, we possible triple top if we can't seem to break through. We're breaking through. We're just not getting a good daily close above that 565 level. So that is something that I am continuing to monitor here as we progress forward. If we move on towards the tech-heavy NASDAQ, we can see it's a little bit of a different picture here. NASDAQ continues to lag behind the SPY here. As you can see, that it is still probably about 5% off of its lifetime highs compared to the SPY and the Dow, which we'll take a look at in just a second as well. As of right now, it's still, here's your higher high, your lifetime high, sitting up here at about the 503 mark. Here's a slightly lower high at 485, and right now we got a slightly lower high at 480. But the key point is we haven't made a new lower low either, so kudos to the bulls for continuing to hold structure here as price continues to hold above the key moving averages, such as this blue line here, which is the 50-day simple moving average and the daily 200 simple moving average here. Something to be mindful of, is the Qs leading things down, or is there going to be a catch-up mode as far as the NASDAQ, and could we see because of these rate cuts, is it going to be bullish overall for tech and we all of a sudden just shoot up and take over these lifetime highs? If that is the case, that's going to send the overall market much higher than what it currently is. It's going to drag the SPY, the IWM, the Dow, everything's going to shoot up. So this is something to definitely pay attention to if we get to moving. Next up is the Dow, the diamonds. As you can see, the diamonds has actually led things up, hitting a new high at about 421. Coming back through the range, though, not getting quite the close back into those lifetime highs. But you can see here the moving averages, they're all pointing higher. They're positively stacked. We are in a new daily squeeze here, so definitely something that we want to pay attention to for the next couple of days, even couple of weeks even, as we progress. And the IWM, your small caps, these are going to be things that could possibly have the higher benefit to lower interest rates. So some of your junk names and stuff like that, rate sensitive names. This is something that a sector that we definitely want to pay attention to. You can see here we have this pretty ugly daily candle. It's a pretty nasty shooter candle on high volume, something to pay attention to. So if we break below 218.15, maybe we could see a retest of the key moving averages down here at about 214.5, something to just pay attention to. But if the overall market perceives the rate cut as, something positive, then sure, we want to possibly take out this swing high at about 228.63. So I am definitely going to be considering a position in the small caps if things are perceived positively. As far as everything else goes across the board, semiconductors, yeah, still a little bit of a struggle here as it continues to try to gather its feet, so to say. This 250 area seems to be the sticky point for semiconductors to break out above. We can see that the moving averages aren't quite as pretty as what you can compare it to as far as the Dow and the SPY. So semiconductors not quite out of the woods. We did see a good move today out of Apple. Apple was up closed up, let's see, about 2% today. Yeah, not too bad considering the overall weakness today, but there was some news regarding JP Morgan possibly taking over their credit card issuers for consumers. Goldman Sachs opted out of it just because of the overall cost. So yeah, we did get a nice little push out of Apple, but it's still kind of in the middle of la la land, nothing too crazy. There is a sector leader here within the Mag 7 that I am definitely keeping an eye on, and that is Meta. And we'll look over at Netflix too, because that was in our weekly watch list that I am paying attention to. Meta continues to look pretty resilient and a major leader within the overall communication sector. If we can get a daily close above this 543, 545 zone, yeah, I'm looking for some higher prices, maybe even up to 550, 560. So something to definitely keep an an eye on. You do have those positive stacked moving averages. Momentum's looking pretty good. So just something to keep an eye on if the market perceives the rate cuts as bullish. Next, Netflix, of course, I was looking for a break above 700, which it has broken above 700. I haven't taken a position yet just because I wanted to see what this whole FOMC meeting was going to do to the overall broader market. So we still have this nice little bull flag here, nice little run up. We did recapture all the key moving averages. Things are looking pretty good as far as structure goes. We have a daily squeeze setting up, and we did get that pullback today back to towards the 21 EMA, which sits at about 683. So this is something I do want to pay attention to in the next coming days, maybe even into next week. If Netflix can hold up structurally and the market wants to move back up, then yeah, 720 is going to be my overall target for that. Someone asked me about Google earlier, and yeah, this is the weaker cousin within the communication sector. We can see that it is not as healthy as a name like Meta. In fact, Google is leading the way lower as far as the Magnificent Seven goes. You can see that we've clearly been on a downtrend here. We've hit our higher high at 191.75, and we just haven't made any sort of new higher high. Here's a lower low, lower low, lower low. And yeah, we're down about 20% off the highs here. So Google is definitely in correction territory. We did briefly lose the daily 200 simple moving average, but we have reclaimed it. Now there is a hourly, was it hourly or 4 hour? I can't remember. I had it in my notes. Not the 4 hour. Maybe just kidding. I did thought there was, we're almost in a new hourly squeeze. So if that's the case, maybe, just maybe we can make a push. But generally speaking, squeezes tend to fire in the direction of the overall trend, which right now the overall direction of the trend is lower on the daily. If the hourly squeeze does want to shape up, it could, come back down to about that 150 mark. So yeah, that's another one I'm paying attention to. And then of course, our weekly watch list, I was looking at a firm. Started to peak through this upper level at about 55. Didn't quite get that daily close above it. So again, we're just going to have to wait and see what the overall reaction to this FOMC meeting. Maybe we'll get some better understanding tomorrow and even Friday. Gold. Yeah, I know a lot of people were watching gold today. Gold was just having an incredible move. Did hit a new lifetime high there on gold. Continues to set up pretty positively structured. Momentum all looks good here. But yeah, let's go take a peek at the intraday move today. This is a 5-minute chart on the SPY. Let me get it set up here. All right, here we go. Let me remove that drawing. Okay, so here we go. We had our opening here. This is a 5-minute daily chart, and we didn't really get too much movement out of the open. We did get a little bit of a rise here, but still had to wait for the opening range to be set, and then it got a little bit sloppy, and finally we got a new squeeze on the 5-minute, and that sent us sharply lower for a little bit, down to about 561.31, and then we of course had that nice little V-shaped recovery. It's something that we've been seeing nonstop lately, and then we chopped around, and then of course at 2 o'clock we had the statement release and the rate decision. Market shot extremely higher up to the 568 569 lifetime highs. We pulled back, and then by 2:30 that's when we started to get Powell to speak, and that's of course when things went pretty much to the downside. A lot of volatility. If you day traded it, hope you did okay. Hope you survived. I personally stay away from FOMC days just because of this mess right here. You'd have no idea what he's going to say and what the reaction is going to be. So we had a lot of volatility, and then when Powell finally finished speaking, yeah, things closed at the lows. We gave up the entire statement and rate release at 2 o'clock, and we closed at the lows. So there is that. Let's take a look at futures as of right now. Futures are slightly improved at time of recording, we're up about 0.5%, hanging out around the 5,700 mark. We did get a nice little move to about 5,730, but things have just kind of dwindled down. We probably won't get much of a move until the Asian market open, and then the European open, of course. Well, Asian market's already open. The European session, which opens up at about 3 a.m. NASDAQ is faring a little bit better. Looks pretty similar, though, to the ES, to the S&P futures. We can see that you had this nice little uptick up to about 19,850. Then we've just kind of been, hanging out at about 19,700, which is still off from the lows at about 19,558. So overall, up almost 0.75% here on the NASDAQ. Once it hit up here, it was up a little over 1%. So yeah, we'll have to wait for the cash market to open tomorrow, see what the big players may possibly think, and we'll kind of go from there. So lots of interesting stuff to digest, and take it one day at a time and let things settle in, and we'll be right back at it. All right, guys, that's going to be it for this midweek's report. I appreciate you tuning in. If you have any questions, feel free to reach out to any of us within the Discord community. Shout out to really the entire community, because we have reached the #1 status here within WAP. We are ranked first in pretty much every category, not just in trading, but in all of Discord on WAP. So congratulations to the team, congratulations to the leadership, congrats to the community, really, because without you, it wouldn't be possible. So thank you for everything that y'all do for the community, for us. And yeah, I think it's a testament to what all of us do. Yeah, just keep on grinding, keep improving, and yeah, we'll see what tomorrow holds. All right, guys, have a good one. Take care. I'll see you tomorrow.